Hi everyone, welcome back to Beerage. It's me and Shashwath again, trying to pursue some kind of understanding on what is happening in the market and trying to make sense of it all. Because I do understand why all of you are keen to follow these tariffs and see if there's going to be any opportunity in the market. Unfortunately, the market seems quite indifferent and quite numb to whatever is happening geopolitically, macroeconomically. It is very hard to see a time in the recent past or even in the distant past when the market was so numb and so oblivious to news. Seems like the stock market is living on the moon while the rest of us are here on planet Earth. Because the global market, though Donald Trump has, departed from being Taco Trump and saying these things are all rolling on and is coming out, these duties and tariffs from what he started in April were much higher than what some countries, especially like India, were much higher than what we thought we were going to be at. And if you see the average, the American average tariff in the beginning of the year was a percentage, 1.5% to 3% average. Now this is like close to where it was almost during the Great Depression times. So this is really shocking. But then if you look at the MSCI, which tracks the country world index, which takes around 2,500 companies across the globe and tracks them, that is inched actually 1.8% higher since August 1st. And if you see the Indian market, especially, which has been targeted with this 50% tariff thanks to the Russian oil issue, the benchmark in Nifty has barely budged in response to all this. And even in Europe, there's a lot of resilience in the stock market. Of course, there are individual companies which seem to be correcting majorly, drastically. But if you see the overall broad spectrum, which is the market index, those seem to be held up, and there seems to be no sense in what is happening. And I cannot fathom and reason to why we are doing what we are doing. Yes, this leads to a lot of frustration, especially value investors who have been waiting for these opportunities for a very long time, doing different coffee range investing. We've been nibbling away a little bit here, a little bit there, waiting for our turn to eat, like Shashwath said, the yellow sapadu. But the yellow sapadu seems to be evading us, and there seems to be a lot of frustration build up. What I want you to tell you is to calm down, and no point getting frustrated other than wait. Because if you agree with all what we're saying, that macroeconomically, geopolitically, we should be in a different market, and the market seems in an all-time high. Some point, I do not know when, but will definitely the market will wake up in response to what's all happening, and we will see a definite change in temperature. At that point in time, we definitely don't want to be, standing without our clothes on as the tide water goes out, as famously Warren said. You definitely want to be wearing your trunks at least. So be patient. Don't worry about opportunities, and keep nibbling away at wherever you see single stocks where you see correction enough, deep enough for you to look at it in at least, one or two, three or four. Don't venture more than that would be my strongest advice. I urge you. So anyway, that's where we stand as far as the stock market is concerned. I would strongly urge you to refrain from, reading too much news and trying to time the market and getting angry and exhausted looking at the market. Do other things, focus on other things. There's enough trouble on our shows, and we don't need this to be added to that. So Shashwath, getting back to what we spoke about yesterday, there were some interesting comments which came out from our viewers.
Yes.
Some of them very good, some of them questionable. I thought we'll take some of the very good and walk through those and appreciate them. Of course, the questionable ones we shall not be getting into.
Yeah.
Which one should we start with? The first one?
This one, just saying that he wants the second part, as we said, which we're going to give him now.
Okay. That is what Anjali Raja has said. Normally, I wouldn't comment on your videos, but I do watch them on a daily basis. Very good explanation of the pros and cons of the tariffs part, Shashwath Vinod, bro. With different perspectives, a great video. Continue to the second part, as you guys said.
Here you go.
So this is the second part.
Yeah.
So I hope it is equally good as the first part was.
Yeah.
So Super Zio says, this is the Vinod we want. Good show. Shash and Vinod bro agree and disagree. The point you missed is the Nobel Prize for the US President. Talking of Nobel Prize, the Cambodian Prime Minister has nominated Mr. Trump, President Trump that is, for the Nobel Peace Prize. Maybe we should be doing the same, Shashwath. This seems to be the right advice.
No, I think we should take a moral stand. One. Secondly, we shouldn't let a bully be a bully. A bully needs to learn his lesson. Though there is going to be a lot of pain, for which we should actually negotiate And one strategy can be cozying up to Trump, but it shouldn't be at the cost of our soul, is what I believe. But again, the key point here is that you're right, the Nobel Prize angle may be one. I don't know how, because with Trump, it's hard to know what he exactly truly cares about. But yes, if the Nobel Prize angle, I don't think in any realistic sense can Trump expect to win the Nobel Prize given all his actions so far. However, if he seriously believes that he's in the contending, one of the contending candidates, and he thinks he can close out the Russia-Ukraine war by putting pressure on India, who is a purchaser of Russian oil, let's say an intermediary through which Russia is able to raise fund its war machinery. Trump is sorely mistaken, because there's another ally to Russia who shares a land border with Russia, through which Russian oil is also being routed. One such ally, or the actual ally which we're talking about here, is China. So even if India today stops buying Russian oil altogether, back in 2021, believe it or not, we weren't sourcing almost no oil was being sourced from Russia, like very minimal. For namesake, we were sourcing oil from Russia here and there in pockets, but pre-2021, we were not sourcing Russian oil as our primary commodity. However, we got a good deal on it. We're getting a 5 to 10% discount somewhere around that figure, and we started sourcing it from them. But the key important point here to notice is that China is happy to absorb some of the oil capacity that Russia has. Yes, China would like to diversify its source from where it gets oil, as we do, but we need the deal more than China does, because China is sitting on a comfortable trade surplus with most of its partner countries, whereas we are not sitting on a comfortable trade surplus. So when we get a discount on some import, we're happy to take it. So for Trump to think that he's going to somehow make Russia fold in the Ukraine war simply because he's putting a stop to India, I don't know. Maybe it's that simple, and this one move is going to tomorrow. I eat humble pie and Ukraine, Russia, there's no war anymore. But I feel like there's a bit more complexity than just saying that India is going to stop supply.
Well, the problem with any of this is Putin has shown in his past and throughout history that he hardly follows through whatever he says. Much like Trump, Taco Trump, there's a Paco Putin, who also doesn't really mean what he says and says what he means. And it's very difficult. I don't think even Putin would probably say, I do not know what I'm going to do tomorrow.
Except the difference between them is Putin promises to be benign, whereas Trump promises to be aggressive.
Yeah.
And Putin then ends up becoming aggressive after promising to be benign.
There's a strange waltzing Matilda going on there. But anyway,
next.
This is a more interesting question. What Thiru is asking is, it's a bit confusing since we know that American healthcare is costly as it is right now, and if he adds tariff on top of it, isn't generic medicine going to be so much more expensive to commoners, and wouldn't that fuel further inflation in the US?
I agree. It will fuel inflation to some extent. It will definitely fuel inflation. But what you have to understand is that in America, insurance and predatory pricing on drugs is huge. And predatory pricing, I don't mean that they drop the price of drugs to compete with someone else. That's usually what we mean by predator pricing. I mean exploitative pricing, where a strip of insulin or like a strip of any other essential diabetes related drug or any other drug that you need on a regular basis, very, very expensive in America to source. A lot of Americans are sourcing drugs from Brazil and all these other countries. So there's a problem there. The US has a problem there. So generic medicine is made for a few rupees and the margin is pretty high. So it's going to be the price sensitivity. I'm sure that they'll be able to absorb a little bit of the declines in profits. I don't think it's going to be a huge inflationary pressure that Trump is going to face. But regardless, I think he's been quite careful, and he's treated pharmaceutical with bit of care, because he knows that might rub people the wrong way. So we'll have to wait and watch. But you're not wrong. Technically, it's supposed to cause inflation, so we'll see.
That's why Fed is sitting where he's sitting.
Yeah.
And Fed is unable to do anything. And the Fed has a two-pronged approach. They have two mandates. One is inflation, the other is job numbers.
Yes.
They have to make sure job numbers stay good. At the same time, they have to make sure inflation. And the problem is there's a divergence happening for the Fed. Better improve the job numbers, he needs to drop the interest rates and stimulate the economy so job growth happens.
Yeah.
But if he does that, inflation, which is already sitting above 2.6 or 2.69%, can start crawling back upwards if he releases the chokehold he's got on interest rates. So he's in pretty much of a very tight situation.
And Powell does not know where the tariffs are going to lead, because it's a bit too early to call the game.
Correct. And because Powell is non-political and he's not a politically astute like Trump is, no matter what happens, Trump is going to blame him for it. That's why the whole gearing up of bashing Powell is to keep him ready and nice and soft. So if the jobs decrease, it is Powell's fault. If inflation comes, it is Powell's fault. Lo and behold, anything that happens which he doesn't like, including the Epstein file, is probably Powell's fault.
Or Barack Obama.
Yeah, we can go back. Barack Obama said he's got his whole catalogs, which
Cohort,
is hits for his works for his base.
Yes.
Doesn't work for everybody else. That's the problem, and that's the problem which he's not able to figure out how to get over, because his base is very strong. As long as this Epstein thing is buried somehow, he should be fine to get over this. But the rest of us are not eating the chicken soup which he's serving us, and or the electric Kool-Aid which he's giving us to drink. So I guess this will leave a lot out in the open. You want to take this last one about the Nehruvian socialists? Or
let's do it. Yeah, go ahead.
Okay. Shashwath is really eager to do this one. Samson Ryan 9604. I disagree with IT staffing company as value buy. One, their model is long term is kaput, because AI will replace lower end, and if software companies hire directly work from home, you don't these subcontractors, because they don't spend money on R&D. These liberal in the West and India are done Soviet style propaganda that China is not big consuming market, only export driven. It's also the fact that China spends more on R&D, bringing DeepSeek. By the way, R&D in Europe, especially Scandinavia, Germany, are far better than America and China. American allies are same Europe, East Asia bloc, whereas China as Russia, North Korea, Iran bloc are fixed. I watched these Tamil TV debates. This will hurt America, but these guys don't care. Their own people will hit badly. Same Nehruvian socialist mindset. I couldn't understand that.
I understood what he's saying.
Oh, great.
Yeah.
Please.
Samson, you have to understand one thing. We fundamentally disagree on a few things. First, you have to get your economics in order. I don't mean to say that you're wrong, but I want you to understand that when you look at the economic spectrum, if you're talking about liberals are on the left-hand side of the economic spectrum. Left-hand side. Left-hand side is also or inhabited by socialists, communists, and if you go even further, then a few other denominations of economic thinkers. So for you to say that we would be on that end of the spectrum and at the same time, deride China is a bit doesn't make sense, because one, China is a communist, at least a state-led capitalistic model where they claim to be communist. But the important point when you look at the facts is that sure, IT may have not done R&D and may have not innovated, but like I said at a Bangalore event that we conducted recently, that the reason why they haven't done so is because they haven't had to. They inhabited a niche that didn't require them to invest in R&D. It's as simple as that. If someone is paying me to do XYZ things, I'm not going to go do ABC things.
Why waste capital?
Yes, why waste capital? That capital could be better spent in either giving returns to investors or figuring out how to expand an already well working system. If it ain't broke, don't fix it. If TCS was doing something that was giving them enormous amounts of free cash flow, as it was in the past 2 decades, why would TCS not continue to do that? That's what they did, and look at the cash pile that TCS is sitting on today. Today you might be looking at the 12,000 jobs lost and you might be saying, oh my god, TCS is in trouble. Please go look at their balance sheet, look at their reserves, look at how much debt they have, how much reserves they have. Then you'll be gobsmacked at the kind of profits that TCS is making. Forget TCS, take any other company, Tech Mahindra, HCL Technologies, take any of these IT companies. They're so capital light on their investments that whatever profits they've made thus far has been free cash flow. That's the beauty of these companies. So when you're valuing these companies, you have to understand that the benefit of having owned IT stocks over the past decade has simply been that whatever you earn is free cash flow, which can either go into your pocket in returns, or it's going to be used to acquire, other companies or scale up operations at a very low cost. So coming to this, what do you think is going to happen when you have these enormous IT companies with huge war chests sitting with no debt, and they're facing companies in the US who are also, ready with war chests. You're going to have a battle, and they're going to bring in technology, they're going to bring in capital, and TCS is ready for that. Tech Mahindra is ready for that. HCL Technology is ready for that. These companies have been building huge war chests. They're ready to put some money into where they need to continue operating their businesses. With all due respect, I don't think that these IT companies are asleep on the wheel. They understand that AI has come in. They're trying to build their own native R&D centers. And if you look at HCL, it's been trying to do that. TCS has been trying to do that. Tech Mahindra has been. Infosys has been putting a huge push into trying to innovate.
One fundamental thing a lot of you guys miss on AI is not something that just happened overnight. AI has been worked on and it's been in the pipeline in computing since the dawn of computing. One of the main reasons why computing became what it is because the pursuing of AI. We've been trying to make machines more efficient, more intelligent, more functional, and this has been going on for a very long time. And all these products such as digital photography, image recognition, all of this stems from our pursuit of AI. And this has been happening globally, and even in India and in Indian companies, it is being innovated. And if you see, most of the talent pool in the US who are helping us develop this AI are all from Asians.
Yeah.
So that says a lot. I know I don't mean to be, nationalistic or racist of any sort, but the proof is in what you're looking at.
Yeah.
The majority of Asians are the ones who are the brain power behind most of this AI, because we have the ecosystem that has that kind of thinking, and we have been building that bedrock for a very long time. So,
and if, sorry, go on.
So if I do believe like what Shashwath says, we have no clue what TCS has been working on.
And if you're telling me that TCS is not going to put their war chest where they need to, please take a look at Tata Motors. Look at what acquisition they've made recently. Look at what acquisition they've made previously. Tata is a group that is not unfamiliar with the idea of acquiring. Even if they can't natively build it within their own ecosystem, they grow inorganically. That's the kind of people they are. They recognize talent, they pick it up, and they operate on it. Tata has made 3 to 4 key shifts in the 200 years of their operations. They went from cotton to producing, industrial sized textile goods. They went to steel, then they went to aviation, then they went to banking, insurance, IT, you name it, they've done it. Cars, trucks. So if you're telling me that companies like this aren't going to innovate, sure. If they don't innovate, then I don't know who is. And if you look at the US companies, do you think Microsoft has been forever, bathing in AI? No. They have been testing it in peripheries of the company. They did cloud. Their main business is actually cloud. And today they're now pivoting to AI because it looks like the next big thing. And ChatGPT's OpenAI's proof of concept has accelerated the development. But if you actually look at it, all these things were happening in small levels everywhere.
And do realize something. Microsoft, when OpenAI, he saw it, Satya Nadella did a smart move of sitting on OpenAI by paying 50%, 49%, so it doesn't get into, conflict of interest and, monopoly and all that. He made sure he's right at the tipping point of owning OpenAI. Microsoft didn't create OpenAI. They went and sat on it. They've done many times before. And what is happening in Facebook and Meta is the same thing. He's going around poaching talent from everywhere. Why is he doing that? Because there's nothing in-house. So everyone's poaching everybody. So what is going to prevent an Indian IT company which has so much of free cash flow, which is spewing cash, who's got so many things going for them, to assemble a team of AI which you don't even probably know about?
And this isn't to say that their revenues aren't going to get hit or their profits aren't going to get hit. But the point is, even if there may be pain, I feel that having so much on your balance sheet has a good shot of trying to weather out whatever storm that comes.
I would say that gives you an opportunity to even consider these companies, which for 2 years ago seemed impossible to reach these kind of valuations, could even consider.
Yeah, but so you can wait on corrections, see where the...
And that's the funny thing, because as an investor, when it's expensive, you're like, oh, we can never buy it. Then when you can buy it, you say, oh, damn, these companies are going to go extinct. What's the point buying it now? I know, I get that feeling. Negativity creeps in every single time. And as a value investor, you have to learn to be unbiased. It is not political. It is not anything other than, is the business viable? And would I like owning the business? And that is paramount. And that is what you should keep center in front of you. Rest is all just noise. all this discussion we are having is just pure noise.
And if you look at China's consumption, last point, they are saving at quadruple the level of rate, more than quadruple the amount that the average American person is saving. So the Chinese are not consuming. I don't know where you're getting that information from, but they are definitely an export-led economy, because look at how much infrastructure capacity they have, which is sitting idle. It's sitting idle. They have so much capacity, but because the world isn't able to absorb the kind of goods that they're producing, it's sitting idle. And you think the Chinese people are absorbing their goods, then I don't know what to say. The numbers are there, the facts are there, and it's up to you to pick it up and take it up.
Yeah, don't go by what you see on social media.
Yeah.
Anyway, that was an interesting discussion. Kind of got heated at the end. Sorry for that. Sometimes we tend to. But like I said, at the end of the day, this channel is about investment and investment alone. So wherever you see these pockets, and if it makes sense and you understand the business and the competencies with you, and you see, like I said, the value again, do consider in different coffee range and don't go venturing beyond that, because like I said in the onset of the video, we have no idea why the market is sitting so calm and collected when we are having a major seismic shift happening on the plates below us. So we'll have to wait and watch, and please be careful in your investments. Make it thoughtful. That's what I'm
And
saying.
there could be a lot of pain for IT and pharma and all our export sector companies. So be prepared for whatever storm may come.
Correct. Don't invest in ideology. Invest purely on value and business sense.
Fundamentals.
Yeah, fundamentals. Thank you for watching Bearish today. I hope you had a wonderful time watching me and Shashwath, and we were entertained on our part 2 venture into what is happening with the tariffs and Trump and the world economy and the stock markets. Thanks for watching again. Good evening.
Thank you.